Welcome back to the Property Growth Playbook, the podcast dedicated to helping you scale your property business and make smarter investment decisions. Today, we are diving into the dynamic world of venture capital, exploring how innovative entrepreneurs can attract crucial funding for their PropTech and DeepTech ventures. Joining us is Penn, a general partner at Solaris Venture Partners. Patty brings a unique focus on early-stage investments in robotics, physical AI, and data center infrastructure, and is an expert in navigating the evolving VC landscape for founders. Patty, welcome to the show.
Thank you, Zakir, and thanks for the great introduction of me. And I'm very happy to be here, and I'm very looking forward to our conversation today.
It's great to have you. Patty, we had a great pre-call, and I'm really excited to dive into our topic today, attracting venture capital for PropTech and innovation. For our listeners, let's start by setting the stage. From your vantage point, what are the most significant trends or shifts you are currently observing in venture capital landscape, particularly concerning AI's impact, product market fit, and investor expectations for returns?
From my experience and observation, I do think there are three things become very, very different now. Change, even compared to several years ago. Even today, building a company is very different from, when I built my first company. So one thing, I think the biggest change is obviously everyone knows AI and, like now that's why it's making the coding much more accessible and cheaper because the new release of Kimi and, the new model and also some latest updates from OpenAI and Anthropic. So actually the stock index in India keep dropping because a lot of IT service company, they might not have the job, not have so many orders anymore. So that's what we noticed. And I used to be a founder, but I'm not a technical founder. So I used to have a CTO and I need to hire engineers and I would need to work with engineers. And I even begin to learn, Python and Java just to understand how to talk with my product manager and CTO. That was the old times when you build a company. But these days, it's become much cheaper. You can create a product literally very, very easily. And you can build a website, testing your ideas, put on the web. Probably you just need to spend 1 hour to build your website. So now the idea is never being the most important thing when you're building a company because you will not be the only one thinking of a great idea. If you're the only person thinking of that idea, probably it's not a great idea, right? So that's what we noticed. And in the past, we always say, if you have a great product, you will occupy the market. You can just focus on that. And of course, we talk about product fit in the past as well. But these days, I think with the changes in AI, it become ever more important. We suggest a lot of founders need to pay attention of that. Even when we review the company, do the due diligence, we always say, okay, what's your plan? What's your POC status now? Have you talked to your customers? What's your plan? And you don't need to have the answer now, but you need to think about the strategy. Because if you have a great product, your competitor probably can just copy it and just produce it in the next 1 or 2 months. And what really give you the competitive advantage is your relationship and, with your clients and their loyalty to you. So that's something we think is very, very important, which I think also that's why it becomes so popular these days, the stealth mode of startups. The second thing we noticed, something changes, which because our fund is based in Silicon Valley, and we've seen a lot of shifts in Silicon Valley in the past few years, and we all see those headlines about, Feifei Li, Li Kuan-yang, all those big names, and also, when the leading researcher or engineer from OpenAI, they left the company and joined, launching their own startup, etc. They easily raise tons of money, value their company over 1 billion on just a PowerPoint, on just a pitch, right? So that is one thing we noticed, the shifting in the investment, which is a lot of money actually begin to go to those kind of celebrity, especially with a celebrity like scientists and researchers. So if you are happen to have like, in this field and really good, I would say take advantage of that. And I do actually have a friend who is also a researcher, had the same this kind of observation as we do. So that's why his investment thesis become very interesting, only investing like very, very early stage, like angel check, but only for the researchers based on the patent and their paper. So which is, I think it will be very interesting. And we do see it might be happen more often, especially in the AI field. But if you are not those kind of big names, you're not serious founder, it's your first time like start your company, or you happen to like, fail your first company, it's also fine. But I think when you talk to the VCs, you need to really find your strategy, try to convince their VCs why they should invest in you. And, not necessary to find those big names, maybe find some true supporters like angel investors, like early stage, still write small checks as they want to support really like early stage or student founders, etc. Do some research on those VC funds and ask those investors what's the last 3 investments they have done. Okay, so that's kind of the second thing we noticed is changing. The third thing is, as a GP, of course, my job is to make investment and I make their capital return, which is our investor to be happy. That's kind of our business, right? So we also notice in the past few years, I think since COVID, I think there are several things happened. One thing is because of COVID and we have those helicopter money and US has so many years of high inflation, but also like low employment rate. And the stock market goes so well, especially tech stock, which actually many investors, they would like to put money actually in the public market rather than in the private market. Because if the public market were happy to make money like, more than 20% like your return in just 1 year or like 2 years, and which has better liquidity, why should I wait for like 80 years to invest in early stage, like, hyper risky, like venture capital fund? And also, I think that actually the hottest like industry is not AI. That was Web3. We had like that Web3 moment. And a lot of VC fund, even those big ones, A16Z, like SoftBank, etc., they all begin to invest in crypto and Web3 company. And Web3 is also like, because of the typical like nature of this Web3, the company, and if you launch the token, basically you already do the IPO. That's why later we have the regulation and, we need SEC to get involved in those, etc. But before, it gave a lot of startups to begin to liquid actually to public their company, raise public capital in much, much earlier, because traditionally we might need to wait for like 80 years or even 10 years to IPO a company. But these days, like, with those Web3, used to take much, much shorter time if you just issue the token. So all those years, we noticed it kind of changed the ARP's mindset. Because I used to have a startup actually in the Web3 as well. And I talked with my investor, which are venture capitalists, and they told me their fund year is only like 3 to 4 years, and they can make, 8 multiply. Like those kind of insane return. And think about those ARPs, like if you can make so much money from crypto, like Web3 investment before, and then the stock market, why should I invest? Like be patient to invest something like super risky, especially I have to say when we started, it was like super, super difficult because like everyone in the US was like, oh my God, Patty, why do you want to invest in hardware? Robotics is hardware. And it's like hardware business is not going to work in the United States. So we understand their concern, and I would say it definitely takes a longer time to convince and really to show those investors our vision. But this is also something I want to share with my fellow maybe GPs or venture capitalists, not be continued forever. I know like the stock market is doing pretty very well. But if you're a venture capitalist, you are not thinking of this year or next year. You're really thinking about like, 5 years later or 80 years later. So We don't invest in agentic AI because this is already happening now. We are very late. If we begin to invest in this, the valuation is too high. But what will be the major, the hype after 5 years, and what's the most valuable startups? That's I think what a venture capitalist need to think about.
That's a really insightful overview. You shared your role as GP at Solaris Venture Partners, focusing on early stage funds in robotics, physical AI, and data center infrastructure. You highlighted the challenges of hardware development in the US and early stage of physical AI. How do you identify and support early stage companies in these complex sectors, and what makes them attractive investment opportunities for Solaris Venture?
Everyone knows data center is booming business. That's why when Solaris, we start our business actually by investing data center and GPU financing. But later we're long-term strategics. So that's why we're thinking, okay, what's the next, right? What if the hype is over, whether there's too much bubble in the AI or not? So that's why we begin to invest in early stage, in physical AI and robotics. So building a hardware company in the US is very, very difficult. There is no doubt. But it's also the best time for anyone who wants to build hardware in the US now, because we can see not only the policy is changing, right? Made in the US, and bring those manufacturers back to the US. There are a lot of different policies to support that, but also we see the emotion from the customers and the clients. They begin to tend to purchase the products made in the US as well. So that's why we think it's in the next 10 years, we think the trend is not reversible. And this anti-globalization, unfortunately, I think anti-globalization for the next few years is not inevitable either. So that's why for us, when we support those robotic companies and we help them to understand this and grab the opportunity, and we offer them a lot of support of, sourcing their, figuring out their supply chain, not only, in the US, but also with our international, connections, etc., for them to understand how to replicate best practice in other countries, to understand how to, if they want to build their, to the production line, etc., how are they going to do that in the US? So that's one thing. Another is, I think a lot of people have misunderstanding about robotics is just the hardware. It is not. And for us, I think the true competition and game is software, is the AI layer. Because why should we have robots today, right? And I actually, when we first start the fund, my colleagues, my other GPs and I, we visited so many factories globally. And we noticed, because we are all from the venture capitalist business, and it's a golden age of the SaaS model. We are so focused on the software, etc., right? And so we kind of forgot how we didn't know how advanced these days the factory are. It's not like in the old movies, it's a lot of workers there. It's actually the automation is amazing these days. But why we do still need robots? So a lot of work really going to do done by robots are those works no one want to do it. I learned about this. It's one of the highest payment job actually from the blue collar. And also the average age of those welders is very, very big. And because no young man want to do the job, not only in the US, but also in Europe and even in Asia. Can you imagine that? It's crazy. So that's why when we think about robotics and how we support our startups, as I mentioned in the very beginning, the technology these days, you need to think about more realistically. You cannot just say, oh my God, my whole goal building company is getting more patent, etc. It's about, are you creating something people willing to buy and use, right? Build something useful for the society. So that's why we encourage them to talk with those factories, and we help them to do that as well. Talk to those factories or restaurants, those hospitality companies, and to figure out what's their biggest kind of concern and the things bother them the most, and then use your technology and try to solve that problem in a very, very early stage, and try your POC and try to solve that, and then later think about how to amplify it and make, your technology become better. So that's kind of the second thing we are doing to support our robotic companies. Yeah.
It's clear that your focus is on high potential complex sectors. You also identified two major shifts in the VC industry: AI making coding cheaper, reducing product differentiation, and VCs becoming more impatient for faster returns. How do these shifts impact fundraising for early stage founders, and why has product market fit and go to market strategy become more critical than ever?
So I would say these days, as I mentioned, if you have like all-star team, it probably be very, very easy to raise. If you already have a company listed on Nasdaq or, bring to the IPO, you probably should be very, very easy to fundraise as well. But if you are not maintaining relationship, everything is building on the relationship. Many people didn't realize that. It's a very interesting actually transition for me. I used to be a founder and now I become an investor. So I'm shifting the side of the table, and I noticed apparently there are more people approaching to me through LinkedIn now. Every day I have so many people sending me emails and also ask a friend kind of request. A lot of emails sending to me as well because I used to be a founder. So actually I read all those messages because it reminds me when I fundraised before, I talked to 100 VC, I got so many rejections, but I just keep going. So I feel empathy for them. But I noticed the two biggest mistake some founders were making. The first is when they do the cold call to reach out, they kind of cannot speak very clearly about what their business is, and there is no hook. And I remember when I started my first company, I spent so much time to working on my elevator pitch, and I used to work for a VC as well and help run an accelerator program. We actually spent 1 week actually just teaching how to do the elevator pitch. These days still is very, very important because you need to understand what's the other side of the table, that person's life it is. I want to tell some the truth from my side. I want to spend a lot of time with founders because that's my passion. I want to support them. I want to learn new technology and know what's happening outside the ear. But still, I have a lot of other obligations, right? For example, I need to manage a team. I need to answer the calls from ARPs. As I mentioned, our investors become more demanding. And they ask shorter returns. We have a lot of pressure. So of course we need to make our ARP happy because that's our business. So you can imagine if I'm already one of my founder, actually the network founder, called me and that was already 12 a.m. And he said, "Oh, Patty, can I call you to talk to you? I know it was late." I said, "No worries. I'm you guys, founders." So that's why the elevator pitch, is very, very important. It's not because we don't want to know about you. It's because sometimes we're just too busy. And I think sometimes the founders take it personal and they lose the courage, and no one wants to be rejected. It's not comfortable. It's not a pleasant journey. But it's part of the process, and sometimes it's not because of you. Another thing is, I think some biggest mistake some founders found is they had a first talk and they're very direct. I used to be in a networking event and the founders just chase me and talk to the business to me. And I told the person, I said, "Oh, I'm so sorry, but we don't invest in SaaS. As your area is not our thesis, unfortunately. But I'd like to maybe send me some short materials. Maybe I can forward to some of my friends if they're interested into." But I think the founders didn't listen. And I used to have a founder actually stalking me all the way, the whole event actually to the parking. And somehow she make me really surprised. And my God, don't do that. And I think it's really, really bad. And some founders got very extreme. They jump into the conversation. I say, I need 5 million. Can you invest in my company for 5 million? But I was hey guys, I just know you 5 minutes ago. And
Now
oh
we're
my
asking you
God.
5 million. Yeah,
Exactly.
yeah.
And then I said, I don't know. I mean, I don't know you. Sometimes I make jokes to make it like, more comfortable both sides. But then I feel like they immediately move on. They begin to talk to another person in a room because they want to do the pitch again. I don't think it's going to work. And everything is always about relationship. As I mentioned, I probably talked to more than 100 investors for my last stuff. And I received so many no's, but I maintain a lot of relationship with them for so many years. And when I launched my fund, actually one of them become my limited partner, which is my investor for my fund. Because he said, like, Patty, I don't like your last company, but I really like you. And for all those years, somehow, you always manage to send a message to me, probably, every half year. But you just show up and, sending greetings and just telling me what you're up to now, what's your progress. He said, like, I never saw a person like so resilient like you, so persistent. And I think you are going to be somebody. I just need to join you some journey. And I think now you're launching your fund is perfect. Finally, I can work together with you. So that's a story I want to share with others. And hang out with the people who is truly like try to support you. And don't feel like embarrassed or like, personal if you're being rejected. And treat the other party as a person, not a purse. And you will get a lot of surprises. Yeah.
That is incredibly valuable for understanding the current climate. Now let's address common VC pitch mistakes. You mentioned entrepreneurs often make mistakes like not doing proper homework or investors or coming unprepared with specific asks. What are the biggest pitfalls entrepreneurs make when pitching for venture capital, especially those in the property or tech sectors, and how can they build strategic relationship with VCs beyond just seeking capital?
Yes. So as I mentioned, really work on your elevator pitch and hook. Everyone is busy. Actually, founder's time is also very, very valuable. You only have 24 hours, no matter how hardworking you are. So you want to grasp every opportunity you might have. So getting people's attention in very short period of time, like 1 minute, is very, very important. And later you have more chance to develop a relationship with this person. And, that's how you build like partnership. Your investor will be your almost lifelong partners as long as you still have the company and they still are holding the shares of your company, right? So that's something I would like to suggest. And also, even people reject you, always have something to ask. Ask someone for 5 minutes. After like 5 minutes and not even know their last name. Remember their last name is a very bad idea, I think. But maybe always leave something, right? Let's say, can I maybe like want to visit that founder, or even just ask, what's the latest article or like the book you're reading you think will be helpful for me? People are willing to give those small tokens because everyone in the room, as long as they're professional, like venture capitalists, we want to support entrepreneurs. And when you ask for those small favors, it also gives you a little bit of opportunity actually to engage the person, right? I actually thought about this when I was a founder and I was like, oh, geez, this person rejected me. What am I going to say next? So usually it turns out when things works for me is I usually talk about just to make it like cheerful for everyone, but in the end, I will just ask. I even just sometimes ask. I said, "Hey, I want to hire like a really good virtual assistant, and do you have any, anything recommend?" It's like so easy. They right away they give you some answers, and they give you a kind of excuse after like several weeks. You can write a note to say, oh, hi, how are you? Hi, Patty. We met in that networking event and I thank you. I really enjoyed talking with you. Just to let you know, I actually listened to your advice and things goes pretty well. And I really want to write this note to thank you. Or like sometimes I really enjoy talking to you. If you have free time, I wonder if you want to grab a coffee with me. So that's how you build a relationship, right? So people need those interactions. So that's some tips I want to share.
It sounds like a disciplined approach to pitching is key. You also emphasize that importance of being curious, open-minded, and importance of listening more when meeting with founders. How does this philosophy guide your due diligence and decision-making process at Solaris Venture? And how can founders demonstrate these qualities to potential investors?
I joke about entrepreneurs have ego, right? And you are building something you're very proud of. It's basically your baby. So if someone is giving suggestions like, oh, you need to do this, maybe you should do that, maybe you should give up this market, you should focus on that market. And some inexperienced founders, they become very defensive. At that moment, I immediately shut my mouth because I said, oh my God, I don't want to upset this person, but at the same time, I'm not going to share anything I know and I truly feel to the person. So I will just say, oh, sounds great and good luck to you. You want to learn from each other. You're literally like shutting the door. I have like high ego as well because when I first started my business, I had a very successful career in Fortune 500 company as a senior manager. And I was like, you guys don't know about this. You guys don't know about this industry. I'm the expert. But later I realized it's really bad because I lost a lot of opportunities to learn from others and learn from other perspective. I give the same suggestion to the founders now. Just to be curious. If you really want to shouting and argue with a person, just kind of argue in your mind, not through your mouth first. Hold that thought. Listen to that person's opinion. It doesn't mean like you need to listen to that person's opinion. You can always smile and say like, thank you. And thank you for your honest feedback. And yeah, it gave me different perspective. You don't need to agree or disagree with the person just on site, but just to try to be curious and open-minded. And sometimes even some people give you bad ideas might inspire you, to lead to some good ideas.
Finally, Patty, if you were to offer one key piece of advice to entrepreneurs, especially in PropTech or innovative ventures, looking to successfully attract venture capital for their projects, navigating market shifts, and build scalable business, what would that be?
Be a player, stay on the table. There's always a chance for you to gain more market share, to compete with your competitor, overcompete your competitors, etc. But you need to be on the table, playing the cards. So try to survive.
Patty, this has been an incredibly insightful conversation. You have given our listeners comprehensive understanding of attracting venture capital for PropTech and innovation. Thank you for sharing expertise from Solaris Venture Partners. Before we wrap up the official podcast segment, I want to ask you something that often comes up with our audience. For many innovative entrepreneurs, the biggest challenge isn't just with product development, but with consistently executing on fundraising and scaling their operations. If you had a magic wand and could solve one persistent bottleneck for Solaris Venture that is holding back your growth or making it harder to consistently identify and invest in the most promising early stage robotics, physical AI, or data center companies, what would that one thing be?
I would say the good team. The team is the most important. Without team, you are not going to build anything. Like I know like many people think like AI now is so popular you can build like a one-person company, but still you need helpers and supporters and you need to engage with people. And with AI can handle all those tedious work and just basic operation work for you. Now the most important thing is really work closely with your team. I'm still a believer, to have a partner in the business and and on this voyage like together. And sometimes it just feel like you two need to, or like three need to fight against the whole world. So find a good team and stick with them.
That's a very clear focus. Can you expand a little on why the team matters and why do you need a partner when you can do everything on your own using AI tools?
Because I don't think no human beings is perfect. I think we are always biased. Even AI can do all the things, but AI cannot do decision for you. So you still need different opinions to make better decisions. I'm still like very old fashioned. I don't believe in the dictatorship, all those things. I do notice a lot of like people running like a one-person company now, but still you might think of having an advisor or mentor, right? Those person are your team as well. And once you start doing that, I think as an entrepreneur, you'll realize it's a really like, one of the most lonely and difficult job in the world. It's very thrilling for sure, but it's also very difficult. And human beings are biased, and AI is not going to help human beings to become a better decision maker.
Patty, thank you again for your such a valuable discussion. I know our listeners will get a tremendous amount from this episode. For our listeners, if you have not subscribed Mehdi AI Consulting Limited, please click on subscribe button and you can listen to our podcast.
Yeah, thank you guys.